Asset finance was hit hard by the global financial crisis, but had recovered 70% to around $900 billion by 2012. In 2013, however, growth slowed to almost nothing, and recovery proved patchy in 2014. As ever, some countries have fared better than others. In North America, the downturn was steep, falling by 30% in 2009. Recovery was comparatively fast too, with 4% growth in 2010, rising to 16% by 2012, after which the pace of growth cooled to 10% in 2013 and around 8% in 2014. South America has sustained its pace of growth, particularly in Mexico, Chile and Colombia, but former powerhouse Brazil is in decline. In this maturing region, provision is shifting from banks to independent lessors, and multi-Latinas are taking over from US multinationals. In Europe, Eurozone problems have slowed the recovery, even in traditionally strong markets like Germany and France. In Poland and Romania, however, leasing has attracted new funding from the European Investment Bank to help finance growth amongst SMEs. And in the UK, the buoyant economy produced 14% growth year-on-year in October 2014. In Asia Pacific, China now leads the way despite a recent blip caused by new tax regulations. The Chinese expect to overtake the US as the world's largest finance leasing market and predict they will have an $800 billion market by 2017. Overall, the global economic outlook is mixed, with the prospect of slowdown in Asia, recession in Japan, and uncertainty in mainland Europe. The recovery in the US and UK appears firm, albeit with slower pace of growth and despite high levels of government debt. In addition to economic uncertainty, however, the asset finance market faces a swathe of regulation. The protracted negotiations over lease accounting continue, and new capital adequacy rules are raising the cost of capital. This may drive down margins, and in some markets, banks are withdrawing and provision is shifting towards manufacturer captives. Against this background, the leasing industry is fighting to position itself with government and market as the natural lender to SMEs and to claim their rightful place as an engine for global economic recovery. Providers are beginning to look to technology to add value, which they hope will improve margins and grow their markets. Big data may help them develop deeper customer insights, while online sharing platforms usher in new concepts like total mobility services. The industry is well placed to provide finance through technology-enabled services, which allow customers to share assets rather than own them outright. While new technology may help traditional providers gain ground, it also opens up their markets to new entrants who may be better able to exploit technology-led opportunities. Tomorrow's asset finance leaders seem likely to be those who combine industry expertise with ability to use state-of-the-art technology. Find out more in the latest issue of the Asset Finance International White Clarke Group Global Asset and Auto Finance Survey. It provides an analysis and comment from both trade associations and senior asset finance professionals across the world. You can download a copy free of charge and stay up to date. Watch out for the free biannual updates at assetfinanceinternational.com.